Well, good morning, everyone. Welcome to our Thursday morning trading session. Hang on one second here. We'll get the screen share going. So yesterday turned out to be a pretty good day overall, in spite of the kind of wild swings that we saw throughout the session. The market did end up trending higher through the day and kind of quiet through the overnight, really. Topping out through the Asian session and the overnight, and falling back here pretty much to where they left off yesterday. So for a change, we don't have an opening gap to deal with. And you can see here on the hawk, we've got a little bit of a sideways pattern going, lots of yellow bars, kind of printing more or less that same price level. The markets did just open, of course, so we'll give them a minute here to settle in. So it looks like we got a soft edge sell signal here right out of the open, and it looks like we're going to test the bottom end of the market first. Of course, it is very early. It's only a couple of minutes into the session. Oh, and now we're getting a first micro macro cross lower. Don't want to hop on board yet. Oh. They're giving me a chance here essentially at a second push type entry scenario. If I don't waste too much time here, I might. All right, let's throw a single on it. What time is it? Oh, only a couple, 3-4 minutes into the day. All right, I'm just going to, this one seems like it's pulling back a little bit. I think I'm going to let it go. here on the Raptor. We've now produced a cloud crossover signal. We're into the primary support line. Okay, well, things should start to even out a little bit here. Oh, or not. Oh, we produced our first in-sync eagle signal here as well, so it does look like the market's going to fall off here a little bit. Just out of curiosity. Oh yes, it looks like that move right there did have enough in it to find its profit objective. And it looks as though the sellers are going to try to keep pressing lower. All right, well, it looks like we've got a bit of a bear market here this morning. We're getting back now into some of those numbers that cost us a little bit of grief to the upside yesterday. 75.80. 75.60 was another number that gave us a lot of support. We might get a late filter entry signal here on the Falcon. Oh, maybe not. The trend line just flipped over. We don't want to see that trend line change color on a late filter entry. We do have another macro pullback signal here on the Hawk scalper. I would probably just go in with a single. The danger, of course, is that the market is making a bottom here now. And maybe I'll try to run it out. We'll see whether or not they can get down here a little bit. Put my break-even trigger near the low. No! Stinkers. Well, maybe maybe I should just learn my lesson and take my profit when I have it. All right, Raptor traders, we might be getting a counter trend signal here. We might be getting a soft edge buy. We do have a test of the extreme now. got a couple late filter entry signals here on the Falcon. So we produced one here, another one here. I would kind of treat both these signals as one because they developed so close to each other. And we do have a chance at a second push entry on this one as well. Now they're retreating. All right, so we got a yellow bar forming here. Let's see if we get that soft edge buy signal. That's the number 2 signal. All right, there's a soft edge buy. Kind of slipped past me as I was cleaning my glasses, but it may be just as well. It's looking like they're struggling a little bit here now. Again, around the primary support zone. Would be nice to come back here with a hard edge bounce, our number 3 signal, short. Okay, well, that's a pretty strong move. All right, so we're into the hard edge, and whenever we encounter the hard edge, we anticipate a reaction. So you can see the Geiger counter flipping back and forth. We're getting a little bit more selling now to go along with the buying. We'll see whether we get a hard edge bounce signal that we can try to sell. They're trying. This may turn out to be just a larger test of the extreme. The extreme, of course, being the low, in which case we should counter with a buy signal. Okay, so I'm going to get ready here. It may develop quickly, so I may have to just buy and sell via the market buttons. The hawk back into yellow bars. Not much follow through after that buy signal. And the eagle fast approaching the hard edge here as well. So curious, did the eagle find its profit objective? Yes, it did. Great little trade for the eagle right out of the open. In spite of all that early selling, we're not seeing much in the way of follow through for the bears, for the sellers. All right, we've got another warning dot to buy, so it looks like we might see the market press higher. Oh, maybe not. Now we've got yellow bars. All right, so we might see a hard edge bounce signal out of this after all. That would be the number 3 signal to short. Still in yellow bars here. Yeah, the falcon is a bit of a mess, as is the hawk. The eagle, the only tool still resembling a downtrend. But here we're against the ATR, so the average true range has turned over. Well, out of curiosity, what was our trade forecaster rating? Oh yes, well look at that. We are in swing mode, scalp mode, hot on the heels. Looks like we've got an early scalping environment creeping into the market. All right, we've got some warning dots to buy, so I'm going to anticipate the signal is going to print right there. And this is very aggressive on my part. As you can see, I'm going in for the full whack. The whole 2%, which I don't usually do on a counter trend trade. And I'm predicting that I'm going to get a buy signal here. This is essentially a larger drawn out number 2 signal, the counter trend signal. And remember, when you have a counter trend signal, there are 2 components. First, you need to have a trend, and then you need to have a retest or a test of the extreme. In this case, the extreme is the low and the failure, so I would be looking for prices to go higher. Okay, here they come. Maybe. A safer entry would be above these highs, by the way. If the market breaches these highs, we'll actually be more bullish. Okay, there's my buy signal. It, as I said, is kind of a extended number 2 signal. The number 2 prompt did not print because there's probably just a few too many bars in here, and we're falling outside the programming parameters. But this is why it's still important for you to be able to recognize these things as they develop. Oh, so much for that. I thought for a moment they were going to run back down here to the lows, but we're fairly stagnant right now. Market kind of stuck. Kind of a small opening range as well. You can see here's the high of the morning, here's the low of the morning. This 57.75, 57.80 area giving us a little bit of action again. Wow, all these buy warning dots and no follow through. Only one, oh sorry, 2 signals. But we have a completed signal right here and another completed signal right here, but so far no follow through. Is the market going to ditch? All right, so we're trying to sell them short now off of this hard edge bounce signal. Ideally, we'll see the market challenge the lows. That'll give me a chance to adjust my stops a little bit. In fact, I probably should adjust my stops. Anyhow, there we go. I'll give them two. I might extend it here to 85. There, that brings us back to the hard edge. The danger is that this may turn into like a little triple bottom type idea. Okay, hooray for us. So I actually took profit on target, which is something that I've not been doing lately, and I should be doing, although now that I've taken profit, just watch the floor fall out of this market. So there was the cluster of selling that came through and pushed the market just below the lows. Nice little first micro macro cross here in the hawk. And a trend change signal / late filter entry here on the Falcon as well. So a couple of signals syncing up along with the Eagle sell signal. Also looking bearish. All right, a little bit of a retrace coming our way now. Again, you could view this as a very, very protracted number 2 signal. We shouldn't be producing so many counter trend signals if the trend is actually down. This is suggestive of higher prices. Let's see, has the hawk given us a signal yet? No. So, like I said, you could treat this as a rather extended number 2 signal if you wanted, or you can just hold out for the proper buy signal. Well, good news, Marlene. Marlene says, I'm starting to like trading the Raptor. It is a pretty nifty tool, I have to admit. Peter says, I've turned into a scalper. And Aspen's comment here, the market's very choppy. Yeah, it kind of goes hand in hand. The trade forecaster, of course, saying we are going to be in scalp mode here very shortly. And when the market is in scalp mode, it tends to have less follow through on the signals and wider swings. So that means we need to go all in, all out on target for the most part. Aspen pretty much even on the day. He says 2 winners, 2 losers, down 75 bucks so far. That's more of a rounding error than an actual loser. Absolutely, Paul. Paul says when things get quiet, can you give us a rundown on the filter? Okay, the Raptor filter down here, this is actually the whole Eagle Trend Trader programmed into the Raptor filter. So the Raptor, of course, a bit of a hybrid of the other birds. So from the Eagle, it borrows the clouds and the filter down here. The filter is essentially a trending filter, a momentum filter. So it tries to give you a feel for whether the market is more bullish or bearish. I don't pay too much attention to the filter aside from trying to see how it's starting to break up. So you can see here we've got a big red block, and then we get a smaller blue block. It looks like the sellers are losing control here because now we got a smaller red block and a bigger blue block. So at this time, things started to look a little bit more bullish. Then the sellers come back and they start to overwhelm the buyers. You see how the buying blocks are smaller, and then everybody's pretty much even up right through here, which again, you can kind of tell just by looking at the chart. And now all of a sudden the sellers start to take control again. So that's more how I tend to use the filter at the bottom. I won't negate a signal just because the filter is out of sync. I know some of the early documentation for the Raptor, and this was more with the Raptor 1, was that you needed everything to be in sync to take a signal. That's no longer the case. That's not as important. But if you're watching the filter, like I say, you can get a good feel for when things are starting to change direction by how the filter is responding. And we're still kind of stuck on this bar. This is going to be a pretty important bar, I think. There must not be any news events or anything scheduled today because they are taking their sweet time. Oh, that's a good idea. Peter says, here's a little tip for everyone. Peter says, I find it useful to put the trade forecaster in the filter panel to save on real estate, screen real estate. That's a good idea. I like that idea. I've done it a little different. I just have one tool per chart so as to avoid clutter. But yeah, if you're running your various tools, yeah, throw it down there in the filter panel. I like it. Okay, it looks like we're gonna maybe creep up here to the hard edge. Are they gonna? They're not gonna give me a second chance to get in on that. Let's see. Did they produce a buy signal anywhere else? Nope, not yet. So back into the hard edge of the trading band, which also seems to be very close to the highs this morning. Looks like the high is 57.85 thereabouts. Or, sorry, not this morning, but this recent swing. Oh yes, and just regarding the trade forecaster down in the panel underneath, Peter also mentions that you can see the dots. So what he means by that is you can see how the trade forecaster is actually plotting. So you can see the next market environment gaining strength and the current one losing strength. Speaking of which, let's see how long we are in scalp mode for. Nuts. About an hour. 53 minutes to be precise. Drat. All right, first micro macro cross higher. Right here on the hawk. It is a scalpable trade. I might choose to take it above the high. Can I cover it below the low? Ooh, I can. That's a little bit crazy, but we'll see whether they continue to press higher. I don't like this 57.80 area. I want to get away from here, either higher or lower. 57.80 pretty much has the market skewered. You can't get too far above it, nor too far below. Okay, so they're going to bring us in on the hawk signal here. Okay, don't stop now. Come on. Get going. Come on, you stinkers. Get up there. It's just the hard edge kind of slowing things down a little. Hi, Andres. Quiet morning this morning. It took a short signal that worked out pretty well. Now we're trying to bind the market up on this first micro macro cross here in the hawk, but they're a little reluctant to cooperate. Not a lot of market participation. It seems like, yeah, like Andre says, business as usual, no moves. It's like they hit the market running out of the gate and then nothing. Come on. I don't want to have to sit through a great big swing. Almost to the break-even trigger. Come on, get up there. We'll give you a little nudge. Give you a little push with the mouse. Get up there. Come on. Get going. All right, I can't stand the pressure anymore. So I'm going to force a break even, and there you go. Do your worst.
Order canceled.
Oh, okay. I didn't mean it like that. Okay, well, I'll take the break-even tap out. It's kind of a wishy-washy kind of day anyhow. The buyers did make a decent push there, but I don't know. They just kind of ran out of steam. Yes, right you are, Tony. Tony says that's like the third time the market's hit the primary resistance line, and it keeps holding it. right, so here come the sellers again. Looking at a possible hard edge bounce. No signal yet, of course. We're just kind of setting up that way. Marlene's asking, would you take the macro pullback on the hawk? Well, it is a valid signal, Marlene. I'm sorry it's kind of gone. It's halfway into the signal right now. A scalp target is usually not too much to ask. And you know what, I probably wouldn't start with my stop that deep. But I think I would restrict my exposure. I don't think I would go in to this trade for a $400 shot. You know, I might dial down the risk amount, maybe throw 1 or 2 contracts on it just to see what happens. The buyers have the advantage that the overall trend is up, right? If you're ever at a loss which way to trade, just take a look at the overall trend of the market. It's not to say there can't be some counter trend moves or even some decent counter trend moves within the day, but generally speaking, if the market is going to maintain the uptrend, it's going to need to go higher. So yes, I would favor buy signals, and if this bar finishes higher, that would be a good time to start rolling my stop. So if my initial stop was down here, once this bar finishes on the high, it would be a good time to roll the stop up to here, because what that would show is a recommitment on the part of the buyers to try to actually move the market up. And since I would also be a buyer, then it would be time to start getting more aggressive with my stop. Okay, so my stop is here. Now it's up here. Depending if you're running an auto break-even trigger or not, you may have hit your auto break-even, or there you go, you would hit your auto break-even, and you would just be kissing your profit objective as well. So the high probability signals, like the macro pullback, they're always worth taking, but you need to kind of balance it with everything that's going on. The sideways nature of the market, like I said, I would limit my risk exposure so that if the trade didn't work out, okay, well then I didn't suffer a greater loss than I needed to. There's no question we're lacking direction today. Looks like Ken is watching natural gas. Hold on a second here, Ken. Let me pull up a natural gas chart. All right, so here's natural gas now on the Raptor. Ooh, all right, so when you open up your chart and you see a chart like this, where your daybreak lines are all smushed together like this, that means you need to go to the alternate settings. And for those of you who haven't seen me do the alternate settings, let me walk you through this. So first thing you want to do is you want to go to your data series, and we're going to reduce our brick size to 4. Now you can see we've increased our spacing, but the clouds and everything don't look quite right, right? We're not producing any signals. Oh, well, there's one. But the clouds need adjusting. So now we're going to go here into our indicator panel, and we're going to find our Raptor tool, and we're going to adjust our cloud sizes. So we want to change the settings from the defaults to the alternate settings of 4, 4, 6. And the easy way for you to remember that is a telephone prefix in Moose Jaw, Saskatchewan. Right? All right, so we're going to change that now to 4. So our clouds are going to be 4 and 6, and our hawk is going to be 4. And I see now why Ken wanted me to go there, because the natural gas, I thought the report was at the top of the hour. But at any rate, you just saw a crazy move out of natural gas, kind of unfolded a little bit too quick to actually take advantage of. But you can see how our chart looks much more normal. I'm using air quotes when I say that. And we're also producing signals, as we should be. And natural gas, a pretty crazy market. Oh yeah, sorry, natural gas out at 7:30, 10:30 Eastern. Yeah, Tony says, you used to be you need your big boy pants to trade natural gas, don't know about current days. Oh no, it's still a very volatile market. It's, you know, if you're looking for action, if you're looking for that thrill of the high-speed chase, well, here's the natural gas market for you. There's never a shortage of volatility in natural gas. I'm sure Andre's asking me to go over the settings for the natural gas market again. Hold on a second here. Where did I put the chart? There it is. Okay, so you remember what the chart looked like when I first opened it up, right? We had daybreak lines like this. You couldn't make heads nor tails out of the signals. Well, there weren't any signals, right? If you're generating one signal per day, how in the world are you going to day trade that? That's not feasible. Now, if you want to trade it that way and take the signals to hold overnight or for a couple of days, then that's fine. Go with the standard settings. But if you open up a chart for natural gas, or the E-mini is going to do this to you as well, and like I say, you have daybreak lines like this, you need to adjust your chart parameters. And what we're going to do is we're going to adjust the brick size and we're going to adjust the raptor. Our objective is to make the chart look normal. And if you wonder what a normal chart looks like, just look at the raptor on crude oil or the NASDAQ or the mini Dow or the Russell or just about any other market except the E-mini S&P and of course natural gas. The other exceptions will be the grain markets. If you're going to trade soybeans, which I do from time to time, you will want to use the alternate settings as well. But honestly, for 99% of the markets that you are going to trade, the default settings are the ones that you're going to go with. So, first thing you do is you change your brick size. So you go to your data series and you change your brick size from the default 8 down to 4 ticks. Next, go to your indicators, find your Raptor version 2.0, and we are going to adjust the cloud size. So you find the parameter, it's about halfway down where it says cloud setup. One brick size is, the default is 12, we're going to cut that in half, we're going to make it 6. 2 brick size, the default is 8, we're going to half that one as well, we're going to change it to 4. Next you want to go here to your hawk bars, and your hawk bar brick size, the default is 6, we're going to change that to 4 as well. So you have 4, 4, and 6. And those will be your alternate settings. Now once you get this set up, you may want to save it as a template so that you have your faster settings saved. I saved mine as Raptor Fast. Imagine that, or Fast Raptor, whatever you want. If you're trading the 30-year bond, which trades at $31.25 a tick, you need to dial down the settings even more. And you may have to go to a 244. And you'll do the same process. Again, your objective is to make your chart look like this. So that your signals will produce correctly. Oh, yes, okay, well, Andre's saying there was one more parameter. That's the soft edge cell. So yes, you can change that as well if you want. So you go to your indicator window, you go to your Raptor, you find your soft edge cell. Where did you go? Here we go. So signal parameters, soft edge sell, the default is 1.01. I find that a little bit too conservative for my liking, so I've changed mine to 1.25. But you should experiment. Don't be shy about trying different settings to see whether or not the signals are working for you. Like what you want to do when you're playing with the soft edge cell parameters, you want to look and you want to say, okay, there's a number 2 signal. Was it an accurate number 2 signal? Yes, it was. Okay, good. So my settings are fine. If you're producing too many number 2 signals, in this case we're not, but let's say we produced a number 2 signal to sell here, a number 2 signal to buy here, a number 2 signal to sell here, and we're not getting any follow through, well then your settings are too aggressive. They're too liberal, so you need to dial them down a little bit. But the only way to do it for sure is to make the adjustment and then go through your chart and see how the settings respond. Not every single signal, of course, is going to work out as well as this one did, but so long as the majority of them do, you'll be all right. I say this time and again, and I understand it's easier said than done, but trading is not about tweaking. I get so many emails and so many requests, like you would not believe how many times people ask, Eric, what's the best setting to use for Trade Manager? What stop should I be running? There is no ideal stop. That's why we gave you 16 of them. If there was one stop you should be running, we would have given you one. You've got 16 so that you can adjust them given what the market is doing. So if I open up my chart like this today and I put the ATR on it and I follow the signal, find a signal, follow the signal. If the signal plays out to your liking, then go with the ATR stop. If it looks to you like you're giving up too much profit or you're getting whipped out too early, then adjust your settings. Maybe go with try a percentage setting. Let's say you took the number 1 short there and you get stopped out here. If that's okay with you, then that's fine. Go with the percentage settings. Or maybe you like the way the percentage trade started here. You got into the trade, it brought you down to break even, held you at break even until the next leg lower. You can always go to something more aggressive, right? Like if you're in this part of the trade here and you're starting to mount up some profits, go to a parabolic. Lock in some of those profits. So there isn't one that always works best, and it's so hard. People get in this mindset. They say, what settings should I have for this? What settings should I have for that? It's not about the settings. It's not it's not about logic. If there's anything you should have realized about trading, is that trading is illogical. That's why I suppose that's why so many people find it so difficult to do. Because if, the logic of it is if X happens, then Y happens. And if Y happens, then Z happens. But that's not how it works in trading. You can get X happening and then B will happen. And you can get B happening and all of a sudden Y happens. It's not about that. It's about responding to what the market is doing. That's trading. Let's see here. John's asking, did we just test the extreme on the Raptor? Yep, that is a very feasible test of the extreme, John. Good eye. So we produced a buy signal right here. Now, again, we didn't get the pre-signal prompt. We didn't get the signal prompt, the number 2 signal. And that's probably because this was a little bit extended. Now, if that bothers you, if you don't feel comfortable eyeballing that, you can go into your Raptor and you can find your soft edge parameters. That's right here, signal parameters SE, that stands for soft edge, and dial this up a little bit. Let's try 1.5. Nope, still didn't find it. Let's extend the minimum bar test. We'll dial this down a little bit. Let's say we only require 3 bars. Nope, not yet. One more try. But this is what you would do, right? You would just go through this and you would tweak it until, well, there is a setting that will produce this as a number 2 signal. But the fact that you were able to spot it even without the signal prompt is very good. Because, again, the signal prompts are tools to help you identify these things as they develop. But yeah, good eye, John. That's exactly what it was. It was a test, a retest of the low. The market showed you it did not want to go lower any longer, came back, produced a buy signal. So yeah, go ahead, give that a shot to the upside. Andre asks one more question. You can ask as many questions as you want, Andre. Every once in a while I'll go on a little bit of a rant, but ask all the questions you want, really, folks. I don't want to put you off asking questions because that's why I'm here, and when the market's kind of stagnant, it sure helps pass the time. Okay, Andres asked, do you adjust the parameters for range-bound market and trending market? I'm not exactly sure which parameters you're asking about. If you're asking about the chart settings themselves, no. If you're asking about the stops that I may select, yes, definitely. Definitely. Stops are a very personal thing. You've all seen me here in the trading room. I tend to be very liberal with my opening stop. Right? I'm a firm believer that a stop is nothing more than a parachute or a safety net. It's not here to maintain some sort of fictitious risk-reward ratio. It's not here to minimize my risk, by jamming my stop in ultra tight. I control my risk by this value right here, not by keeping my stops overly tight. Now, the good news about the DTS system, of course, is that very often it picks up immediate momentum. So you don't get the market moving back against you very often. However, especially when the market tends to be a little bit range bound, there will be periods that the market may engage your signal and then decide it's not quite ready yet. Kind of like my wife when we're going somewhere. And then it's got to bounce around a little bit more, and then it finally decides, okay, it's time to go. All right? What you're trying to avoid is you're trying to avoid the premature stop out. Right? Because this will not be a loss. This value down here is not a loss unless it gets hit. So if your stops are within striking distance, then you've already incurred a loss. Now you're out of the trade. Now you have to make another decision. I know people always say to me, well, I can always just get back into the trade. Yes, that's true, but it's not as easy for most people to re-enter as you might think. It's very easy in hindsight to say, oh yeah, I would have just bought back in. But when it's unfolding real time and you see the market bouncing around, bouncing back and forth, it's not that easy to hit the buy button and get you back into the trade. So my way of thinking is, let's give this trade every opportunity to succeed. And by doing so, I normally look 2 swings back. It's very unlikely the market will push back far enough to take out the last 2 swings. It may try to drift lower and test the previous swing, which is why I usually don't go below there. And I'll usually look 2 swings back. Now, if that seems a little too dear to you, maybe you kind of eyeball it, go 1.5. Again, the purpose of this stop loss is it's a safety net. It's to say, oh, I was wrong about that trade. Time to go. Time to take my loss, and I control my risk amount, again, by this value right here. If you are not comfortable with this amount, you make the adjustment right here. Don't strangle your trades. This is something that took me a long time to learn. And fortunately, I had a very good broker friend, and he said, Eric, you're killing your trades. You don't think these little $50, $60, $70 losers add up? That's exactly what we're trying to do on the buy side, right? Capitalize on the $50, $60, $70 winners. Go in, take 50 bucks, take $70, take $100. Do that time and again and again and again. It's amazing how quickly how people will justify taking a $100 hit and say, oh, well, it's only a $100 hit. And they'll squirm about taking a $100 profit. Oh, should I take the profit? Will it go higher? It's funny how our minds as traders work. But when it comes to setting your stops, yes, I will adjust my stops for the market environment. I tend to be a little bit more liberal to start, and then as the trade progresses, I'll become a little bit more conservative. So here, if I already have open profit, let's say I ran multiple contracts, I've got profit on one, I would probably move into a parabolic mode, or maybe even a bar high-low and only allow, a couple of bars back. But again, it is a very personal thing. What I'm showing you is what I am comfortable with. Some people look at me and think I'm crazy to even let a $50 profit evaporate. Other people look at me and think I'm crazy for taking a $100 profit. So, like I say, it's a very, very personal endeavor, and you need to find what you're most comfortable with. Yes, Vic, I was speaking Canadian. Thanks for catching that, eh? When I said Z instead of Z. There's a few Canadians that say Z, but everybody thinks they're saying C. The letter after or before D, after B. So if there's a C, if there's a Z in your name and you say Z, then you're probably going to get a C. Just so you know. All right, So we're back near the highs of the morning. We are getting a crossover buy signal. The buyers, they looks like they're going to control the market here for the short while. Again, covering this trade, we're going to have to go fairly deep on this. A second push entry would allow us to get in a little bit tighter. So we're seeing where the market is flinching. You could probably cover it here to the hard edge, which is also the primary support zone. Ideally, I'd like to be able to cover it down there. What I would really like to see is a little bit of a pullback, because as you can see, we're back right here to the highs of the morning. So there's likely to be a little bit of a reaction here. Yeah, you see, here's a good comment too from Peter. Peter says, I cannot recall an instance. He says, in all the sessions I have attended, I cannot recall an instance where your full safety stop was hit. It happens once in a while, and what will happen is the market will bring me in, and then all of a sudden the market just, in this case, would get flooded with sell orders, and it goes boom, 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 and usually right about here there's a little bit of a pause, and I'm thinking, okay, I'm going to get an uptick bar, and that will give me a chance to roll my stop, but then it just continues lower, and they don't give me a second chance to get out. When that happens, I really debate just closing the market out on the fly. I usually don't. I usually end up taking the full hit, because I'm still always hoping that somewhere down here they're going to try to recover at least for a few bars, so I can adjust my stops a little bit. What tends to happen in this kind of situation is that if the market does recover off of the low, there will be one more hiccup, and this will be the crunch time. And from here, the sellers will either force the market lower or the buyers will recover. If I get that, then I can safely start to roll my stop, because at this point, if the buyers fail again, then I may as well take the stop out, and it will be, in this case, approximately half of what I started with. But you're right, Peter. It is rare when you run a reasonable stop to end up taking a full stop out on a position. It doesn't happen that often. Many of you will have heard this, me refer to my trading friend Tom Loge, who loves running ultra tight stops. So you talk about personality differences. Tom will run a super tight stop, and I mean super tight. So he may look to buy, and he'll put a stop right there. He'll give the market $25 or $30, and that's it. And he is seriously looking at $100 or $100 target or more. He is looking for that immediate momentum. And but Tom is, he'll take a half a dozen stop outs on the day, ranging anywhere from $30 to $50. And so I ask him, well, why don't, instead of taking a half a dozen stop outs during the day and having to pay commissions and fees on all those, why don't you just run one trade and leave yourself a $300 stop? It's the same difference, and this stop may actually have a better chance of working out. But if you've met Tom, you would know he's not wired that way. So that would just drive him bonkers. He couldn't do it. So we might get a little bit of a pullback here. Looks like we're getting some reaction to the highs of the morning. Yeah, Ryman says we're back at yesterday's close as well. So the market tried to fall off early on, has since recovered. So a fairly neutral day overall. What I would anticipate here is a little bit of a retrace, perhaps back to the hard edge, back to the primary resistance line again. This whole 57, well, primary resistance is at 57.83.5, and that is a very sensitive price area. I would welcome a hard edge bounce. I do think that we are a little bit more bullish right now. For the session, in spite of the early drawdown, the buyers have recovered. So I always say whoever controls the last swing controls the market. Well, right now we are definitely a little bit more bullish. Well, I'll hang with it for a few more minutes here, but I think it may take them a little while to retrace. Things starting to loosen up a little bit. Trade forecaster says we're going to leaving scalp mode, moving into swing mode, so we might get a little bit more follow through. No, they're just kind of going flat. All right, boys and girls, I'm going to wrap up shop here for the morning. I'll see you Friday morning. We'll do it all over again, and hopefully we'll see a little bit more activity tomorrow. We'll talk to you then. Bye for now.